Hi everyone, Assalamu alaikum. Welcome to episode 2 of the Simple Muslim Money podcast. And on this episode, I am going to be talking about Islamic Index Funds. And the whole kind of premise of this podcast, Simple Muslim Money, is to provide simple halal investing and personal finance sort of information out there, just so everyone can kind of benefit from this. And I also want to kind of make it kind of understandable for that normal people. It's not meant to be like super complicated, and I don't want to get like really crazy so that kind of no one understands what I'm going to kind of explain. But I also want to just put a disclaimer out there. I'm not a financial advisor. I'm not allowed to give financial advice. So all of this is just for kind of information and entertainment purposes. So please do look into your own research. And so best place to start was in the previous episode. I talked about Mr. Money Mustache, who's someone that retired at 30. He's like a normal person, he's not someone that made like a whole bunch of money from a startup or something like that. But what he did was like he would kind of earn money, kind of live within his means, sort of cut back and save money. He used to like go to everywhere with a bike. He lived in like a small place, just saved as much money as he could. And then he would kind of invest that money into index funds. Like most of it was into index funds. What the amazing thing is, there are Islamic index funds there. So like a regular index fund is something that I wouldn't invest in because invest in a whole range of sort of companies that would not be kind of suitable from a Muslim point of view. But there are Islamic versions out there. So first of all, I'm just going to kind of explain what is an index fund, and it's something I talk about on my YouTube channel as well. So feel free to check that out. That's Inspired Iqbal. And and then once I've done that, I'm then going to move on to talk about an Islamic index fund. Like, what is an Islamic index fund? So if I explain an index fund first, so an index fund, probably the most famous one out there is the S&P 500. What that does is invest in the top 500 companies in the US. And what you do is you put your money into this index fund, and then your money is split across all these 500 companies, and it's split like according to the weighting of how big the company is. So companies like Apple, Amazon, Facebook, they're like huge, massive companies. So more of your money would go towards those. They'll have more of a sort of weighting, and the other companies lower down in the 500 will kind of get smaller and smaller sort of percentage depending on how the company works. So the amazing thing about this is, well, one, it's instantly diversified because your money is just spread across all of these sort of different companies. And second of all, it's very simple. It's just done by an algorithm. It's just done by a computer. Whereas your more kind of traditional funds would manage by like a fund manager, and that fund would kind of, depending on how well it would do, would kind of depend on that fund manager. Whereas in this case, that's not the case. It's just done by these simple algorithms. And another cool thing about that is, the fees are lower on the index funds as well. And fees are something really like important and something that I'll be kind of thinking about talking later on in another episode of the podcast. But it is really important to keep your fees down. So that's why index funds are kind of done really well over the long term. And I think like over like most index funds, especially like this S&P 500 has beaten any other fund out there, like over 90% of funds out there. And, it's something that Warren Buffett, who's like the best investor in the world, has recommended that your normal investor should just invest in an index fund. Just put your money into it and just kind of just forget about it and just kind of just leave it in there. So, and another thing that, I remember hearing Morgan Hassell, who wrote this book called The Psychology of Money. Like a lot of money is down to your psychology. And the way to kind of build up your wealth is patience. So you just need to leave your money in there for a long time and just kind of just save as well. So the more money you can put away and just be patient, then you will kind of do well in the long run. So that, I mean, it is really sounds really simple, but it's not always as easy to do like that. So so if I just talk about Islamic index funds, so what they do is they invest in the top companies as well. However, one of the things they do is there is like a board of Islamic scholars, and what they do is they kind of screen all the companies that are in there. So what they'll do is they'll filter out like really obvious ones like alcoholic companies, any sort of gambling companies, but also like financial institutions as well, because they're dealing in interest, and that's something we want to sort of try and avoid. So they have a lot of sort of tech companies out there, but they also have other sort of companies in there as well. So your money is kind of split across all of these companies. And another good thing I do want to point out that I heard Morgan Housel talk about was that, a lot of companies, like over the long term, like within the index as well, like 40% of those don't make it. So there's a lot. And then with the index, what it does is it automatically will get rid of those companies and then bring in the next company. So it's a really great way of kind of diversifying. And I probably have about 90% of my money kind of inside index funds. And Warren Buffett has kind of said, index funds perform much better than like fund managers and also like anyone out there. So if anyone is out there and just buying individual stocks, but one, it's quite tricky to buy stocks because you need to make sure it's halal. Another thing is very hard to beat an index fund over the long term. So over the long term, an index fund will go up and down. And, there are that's just how the nature of the market is. But over the long term, you will see like a kind of good return. I know index fund does sound like a really fancy term, and it's something that I'll be kind of coming back and talk to. I do want to kind of make it as easy as possible to kind of explain. So yeah, if you do have any questions, feel free to hit me up at Simple Mus Money, MUS Money on Twitter, or Simple Muslim Money on Instagram. I'll really appreciate any sort of feedback you have, any questions. I'm really keen to get feedback from people. And I'm really excited to kind of, just keep working on this podcast and putting stuff out there. I also want to say that the index fund that I invest in is the HSBC Islamic Global Equity Index. And, what I'd recommend is people just go online and just have a look at this index, like just Google it. HSBC Islamic Global Equity Index is pretty one of the top things that come up. And you get like a sheet and it kind of tells you what companies it invests in and how it sort of works, just to kind of get a feel for how this works. It is actually really simple. Sometimes I feel like when I'm talking, it sounds more complicated than it actually is. So yeah, if anyone does have any questions, please. And also, if you want to come on the podcast as well, I'm really keen just to, even beginners. I think it's great just speaking to beginners, speaking to each other, just sharing this information. Yeah, it'll be great to have that on the podcast.